Looking at the markets with David Modell. Today we're going to discuss something that's, well, pretty important to me. It's the most important rule in trading stocks and options. Yeah, if you're going to pay attention to any of my videos, this would be one of the best ones. Could save you a lot of money and heartache. So let's go. Rules, rules, rules. Rules are not necessarily the most fun thing in the world, but then neither is losing money. Following guidelines can help you grow your account without relying too much on luck. So what's rule number one? What is the most important rule when it comes to trading stocks and options? Well, it's debatable, but for me, the answer is clear, and it can be a financial lifesaver. The rule is, here it comes, always use small position sizes. There are a number of ways to hedge against or protect yourself from big losses when trading stocks or options. You could buy protective puts when you buy a stock or ETF. You could use stop loss orders. You could use pairs trading, such as buying two stocks or ETFs that counteract each other, such as SPY and SDS. You could sell option spreads instead of just selling uncovered options. But the best way, in my opinion, to hedge against big losses, and this can be combined with other hedging strategies like the ones we just mentioned, the best way to hedge is always use small position sizes. Trading small amounts of money can help to ensure that no single trade will destroy your account. It can also help to avoid emotional trading, as you can leave your emotions out of it if there's not a lot of money at stake. Now, just a side note here, please note that this rule, the small position sizes rule, is not guaranteed to work 100% of the time. For example, if you short sell or short a stock and the stock price goes up, your financial loss can potentially be unlimited, even if you took a small position size on the trade. So please be aware of that. All right, here's an important chart. Breaking this rule, the small position sizes rule, can be financially devastating. For example, if you lose 5% of your account, let's say you make a trade and you lose 5% of your trading account. Well, it's not the end of the world, because then you only need to gain about the same amount, 5.3% on your account to get back to the break-even point. However, if you take a huge trade, way too big, and you lose 50% of your account because you made a big trade and lost, you'll need to gain not 50%, no, you'll have to gain 100% on your new total, okay? You'll have to gain 100% on your account just to get back to where you were before, to the break-even point. And if you lose 75% of your account, you'll need to gain a whopping 300% on your account just to get back to the break-even point. So, big losses can be devastating. When it comes to trading options, losing your entire position on the trade is entirely possible. For example, you might buy a call or a put, and it could expire out of the money. Therefore, when trading options, I recommend risking no more than you're willing to lose entirely on the trade. Risking less than 5% of your account on any options trade is a sound guideline for most retail traders. Now, if you're buying stocks or ETFs instead of options, then you might have more leeway, especially if it's a stock or ETF that doesn't move much. Still, I would not recommend risking more than 10% on any stock or ETF trade, even if it's a conservative, and I put that in quotes, conservative ETF such as XLU, the utilities ETF, or DIA, which is a Dow Jones ETF. If you're short selling stocks or ETFs, there's potentially no limit to your losses. So I would recommend taking super small position sizes with this strategy. And you want to combine that with other hedging strategies as well. Never, never load the boat on anything or load up on any trade. Remember, there's no sure thing in the markets, and any trade can go against you. So don't trade what you're not willing to lose. And again, I'll say it as many times as I need to, keep your position sizes small. I personally consider the small position size rule to be rule number one. Use this rule consistently for better returns as well as greater peace of mind. So if you'd like help with this idea or with just about any aspect of trading, finance, or investing, you can contact me, David Modell. My email address is davidmodell@gmail.com. Thanks for listening, and I'll talk to you again soon.